This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. exports of crude oil to India last month climbed to their highest in over 2 years, ship tracking data showed, as refiners in the country sought alternative supplies following tighter U.S. sanctions on Russian producers and tankers. The U.S. exported about 357,000 barrels per day, BPD, of crude to India, the world's third biggest oil importer and consumer, in February, ship tracking data from Kpler showed. That compared with exports of about 221,000 barrels of oil per day last year. The jump in exports to India underscores how multiple rounds of sanctions imposed by Washington on ships and entities dealing with oil from Iran and Russia since October are disrupting trade with major importers of their oil.
Oil prices rose on Thursday after heavy sell-offs drove the market to a multi-year low. However, tariff uncertainties and a rising supply outlook capped gains. Brent futures were trading up 39 cents, or 0.56%, at $69.69 a barrel by 0416 GMT, while U.S. West Texas Intermediate crude futures climbed 39 cents, or 0.59%, to $66.70 a barrel. Brent plunged 6.5% in the previous 4 sessions, dropping to its lowest since December 2021 on Wednesday, while WTI fell 5.8% over the same period to its lowest since May 2023.
Moving on to the top news in the energy sector.
Mexican state company Pemex is in talks with potential buyers in Asia, including China and Europe, as it seeks alternative markets for its crude after U.S. President Donald Trump imposed tariffs on imports, a senior Mexican government official said. Trump this week implemented 25% tariffs on goods from Mexico and Canada. While Canadian crude won an exception of a 10% levy, Mexican crude is to be taxed at 25%. Last year, Pemex exported 806,000 barrels per day, BPD, of crude, of which 57% went to the United States. In January, exports slumped 44% year-on-year to 532,404 barrels of oil per day, the lowest level in decades.
Britain plans to overhaul its windfall tax regime on oil and gas producers once current levies run out in 2030, it said on Wednesday as it vowed to transform the North Sea into a renewables hub. The government is asking industry players and others to provide feedback until May 28 on policy options including taxing what it calls excess revenue. It did not announce specific price thresholds in this consultation. Any new regime would likely apply to the price producers receive after the use of financial products commonly employed to shield them from price fluctuations, according to the consultation document. Next, we have the top news in metal markets. Gold inched up on Thursday, helped by a pullback in the U.S. dollar, while investors awaited U.S. non-farm payrolls data due on Friday to assess the Federal Reserve's interest rate trajectory as global trade tensions escalated. Spot gold firmed 0.1% to $2,921.19 an ounce as of 0625 GMT, while U.S. gold futures also added 0.1% to $2,929.30. The dollar index wallowed near a 4-month trough as the U.S. exempted automakers from the 25% tariffs on Canada and Mexico for a month as long as they complied with existing free trade rules.
Dalian iron ore futures prices fluctuated within a narrow range on Thursday, as investors weighed expectations of additional stimulus measures to boost consumption in China against trade concerns and reports of steel production cuts. The most traded May iron ore contract on China's Dalian Commodity Exchange was flat at 776 yuan, $107.14, a metric ton, as of 0302 GMT. The benchmark April iron ore on the Singapore Exchange edged 0.6% higher to $100.35 a ton.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures edged higher on Thursday, tracking rival oil's movement in Dalian and Chicago markets, although caution over U.S. tariffs capped gains. The benchmark palm oil contract for May delivery on the Bursa Malaysia Derivatives Exchange added 2 ringgit, or 0.05%, to 4,419 ringgit, $998.42, a metric ton by the midday break. The market is still cautious as confusion over the US tariffs on Mexico and Canada persists, said Anil Kumar Bagani, head of research at Mumbai-based vegetable oil broker Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.